Hello, everybody. Ignatius L. Jackson, CPA, here with another exciting Ignite Business Talks recording. Okay, this is the Ignite Business Talks podcast. Today, I have a special guest. His name is Joseph Robbins, CPA, and we are talking about bad advice that we're seeing out there on social media, and we're talking about some cool financial advisory type stuff that you might want to consider in the financial advisory, financial planning realm to help you towards your financial future. And so Joseph does a little bit of both of those things. He does some tax stuff and he does some financial planning and advisory stuff. And so I'm just going to let him maybe tell you a little bit more about himself and introduce himself a little bit more to you guys. And then we're gonna hop into just rapping a little bit. That's how I do it. We just kind of talk a little bit. I'll ask some questions. He'll probably come up with some stuff, and we'll go from there. So, thanks for joining me here today, Joseph. And why don't you just, like I said, tell us a little bit about yourself?
Cool, no problem. Well, yeah, appreciate you for having me. My name is Joseph Robbins. I'm a certified public accountant based primarily in Baton Rouge, Louisiana. But I'm also a managing partner of the Wealth Collective LLC, which is a financial advisory group. We broker dealer through Equitable Advisors, but I've been in the space. I've been in the financial services industry since 2014, so about 10 years now. Got my CPA license in 2015 and got my securities licenses in 2017, 2018. And so in the space, so I've been in practice for myself I worked at a firm for 3 years right out of college. And then 2017 jumped out, started my own practice, and then also joined with the Wealth Collective as well as a partner. So been on my own essentially for the past 7 years, and just been growing and developing the business. Started it completely from scratch. I work with a lot of business owners, whether it be startup or mid-size level businesses, and helping them with proper tax planning, tax strategization and stuff, and just ultimately things surrounding their accounting and business processes when it comes to keeping up with their financials and knowing how their business is performing. On the Wealth Collective side, we provide holistic financial planning for our clients. So whether they need, retirement planning, investment planning, life insurance planning, estate planning, all those long-term care needs, or just all the different things that, encompass true wealth. We want to make sure that we are touching those points. And not only on the financial side of wealth, we build really deep relationships with our clients. So we're having conversations about nutrition and diets, health and wellness, spirituality, and all different types of things. Because many people, the minute you say wealth, they automatically start thinking about what's in their bank account. But we're talking about, family and everything that really is considered wealth when you look at it from, just being a human being. So between both, being a CPA and a financial advisor, I'm able to provide a wealth of knowledge and information. Me and my partners, we're able to provide a wealth of knowledge and information to the clients and the people that we work with. And over the past 7 years, we just try to work with good people. We do good business with people, and we want to work with good people who recognize the value that we have, and I just appreciate what all the things that we got to offer. So, pretty much for me on the professional side, that's me. I'm a father. I'm also a husband. Me and my wife been married for 5 years. Got a 2-year-old son. I'm an avid distance runner. I've run 4 marathons. Full marathons. My goal is to run a marathon in each state by the time I'm 50. So I got 46 left to go. I've been a runner for about 5 years now. Didn't run in college, didn't run in high school. I just woke up one morning and started running. But musician, I marched in a band in college and everything, so that was fun. And I'm a pretty easygoing guy, and been building a business and everything, focusing on family, and trying to help and make my community better than what I found it.
Awesome, awesome. Thanks for that. That's pretty sweet. Your background there. So. Um, Now, let me ask you on the financial side, how are you structured? Are you a broker dealer? Are you an RIA? Are you both? When I say RIA, for people that don't know, that's a registered investment advisor.
Hmm.
So how are you structured on the financial advisory side of things?
Yeah, so I am a registered investment advisor. Of course, we provide we got a fiduciary responsibility to our clients, and we do a little bit of of product sales focused type deal, but then we also do, assets under management. Client comes to us and they want us to manage a portfolio of assets and stuff. We put a percentage on it and, charge a client that much, to manage the assets. But then, like I said, we're also providing needs for clients. So we have a client that might come and they need, a life insurance policy and stuff. We're not captive agents, so we can shop various companies. We do business with companies all over the world, and see what best fits for the client. And then, go from there. Clients might have a life insurance need, a long term care need, which is one area that we've really, really been focusing on, because, right now, the baby boomer generation they're retiring and exiting the workforce. But you're seeing a lot of them, having a need long term care assistance. I mean, as you get older, you start needing Uh, those different types of services and stuff, whether they be, skilled nursing facilities or, care in home or whatever. And so those are just things that, Medicare, Medicaid don't cover. And so, we're having those conversations now with people about how are they going to, protect themselves when they do separate from service from their employers and stuff. And so, just having those conversations. And then also too, we partner with, lawyers and attorneys and lawyers who can help us help clients with drafting wills and trusts to implement proper estate planning. We do, like I said, we broker. Our primary broker dealer is Equitable. So that's who I'm a statutory employee with Equitable. So if you think of it, kind of like State Farm, Allstate agents who have their own, offices and stuff like that, but they, do business through State Farm or Allstate. But the only difference with us is that we don't have to just promote equitable products. And so, but we broker dealer through them. They're our broker dealer.
Gotcha. Okay. So it sounds like the majority of the stuff you do is kind of fee for service, essentially. And then if someone wants you to manage their investments, or if they want some sort of insurance product that you can help them identify, then you might go through Equitable to get that taken care of, basically.
Yeah.
So, in a nutshell, okay, cool, awesome. And so I'm sure you see my shirt here, self-directed retirement. Have you ever dealt with any like self-directed retirement accounts and things of that nature in terms of helping people out?
Yeah.
What are your thoughts on doing that? So, and to be clear, when I say self-directing, because sometimes people think I'm talking about like just buying individual stocks or something like that. That's not what I'm referring to. I'm more referring to like for example, investing in private real estate funds, or
Mhm.
buying an actual house inside the retirement account and renting it out as a
Mhm.
rental, doing business loans, or being a private money lender, stuff like that. So,
Mhm.
have you ever had anything with that with any of your clients? And what are your thoughts
Yeah.
on people doing self directing out of
Yeah.
curiosity?
Gotcha. So I haven't had any of my clients do that, but I'm not opposed to self-directed IRAs. I think they are a phenomenal tool to give you a tremendous amount of diversity when it comes to retirement. Because many times, we when we think of retirement, we're thinking traditional things, 401ks and IRAs, and the money in your 401k is invested in indexes and mutual funds. The money in your IRA also might be invested in indexing and mutual funds, but if you're a little bit more savvy, you can, invest in individual stocks, ETFs, and things like that. But the self-directed IRA, it is a good tool, but it's just a matter of having that clear conversation with the client about the amount of risk that they're taking on, if they're comfortable with that amount of risk that they're taking on, and then also having a conversation amount of responsibility that they could potentially be having as well, on a self-directed front. But I'm not opposed to them, but it's just a matter of the level of, like I said, the level of risk the client's willing to take, and how much oversight is being over these self-directed, funds and stuff. Yeah.
Yeah, I hear you. So yeah, it's interesting. The you're one of the few people who at least are not opposed to it, even if you don't have any clients who have actually done it. Most of the people I talk to that are CPAs are still very anti self-directed retirement accounts. Um, I think they think that their clients are their own worst enemy, which sometimes is definitely the case.
Mhm.
But at the same time, you have some clients who are just very anti stock market, don't want to invest in the stock market, will
Mhm.
never put money into the stock market, but they own a lot of, for example, houses or rental properties,
Mhm.
or they do private money lending or something like that as their investment
Mhm.
mechanism. And so it's just interesting to me that we don't have more people that feel that way, that
Yeah,
are taking advantage of the rules related to the retirement accounts, which would help to reduce their taxes on
yeah,
the taxable side by doing some of that investing inside the retirement account instead of having everything outside their retirement account. So, just something
yeah.
I always like to ask people when I talk to a CPA or financial advisor or planner.
Yeah, yeah, no,
Um,
I feel like
yeah,
the self-directed IRAs, they give a lot of opportunity for lack of a better words, the little guy. You know what I mean? Because
yeah,
when we're investing in the stock market, essentially you're buying ownership of multi-million dollar, billion dollar corporations or whatever who already have, staff, cash flow. You know what I'm saying? They already have these like lines of credit. They already have access to the resources to make them be successful. And so, if I go buy one share of Apple stock right now, it's not going to be a drop in the bucket to Apple. You know what I'm saying? Even if I go buy 10,000 shares of Apple stock right now, it's not going to be a drop in the bucket to Apple. But if I use that same amount of money to do a private lending, opportunity through a self-directed IRA to somebody who, a real estate developer who's trying to develop a community in my community, you know what I'm saying, then that can
hmm
probably really help them. You know what I mean? And
yep,
so, so that's but like I said, it's just a matter of how much risk you're willing to take and then what types of investments you're making in those self-directed IRAs.
yep,
I get, especially, and we said we was going to talk about this in the beginning of the recording. uh, People are always coming up with these like ideas, especially with the onset of social media. Every time you get on, Instagram, Facebook, somebody's trying to sell you this new idea. They're like, oh, take advantage of the tax strategies that the wealthy do and take advantage of, yada, yada, yada. But and not saying that those things are bad or like those strategies aren't like accurate, but I mean, the amount of complexity that a person who makes $70,000 a year needs in regards to like tax strategies compared to somebody who makes $7 million a year is completely different. And so it's like you wouldn't put a Ferrari engine in a Honda Accord. You know what I mean? So it's like you're gonna ruin a pretty good a quality car. You know what I mean? Like a Honda car Accord is a good car, but it's just that I feel like a lot of people have been baited into getting on with these subscriptions, and like their expectation of what's going to happen or what's going to happen is a whole lot higher than what it actually is that will come to fruition.
yeah, and it's a very good point. You have to have a goal in mind on what you want to invest in when you go
Yeah,
into self-directed retirement accounts. If you don't know what you want to invest in, or you don't have enough money in the account to invest in whatever you're trying to invest in, then obviously it's not the right time to do that, probably.
right.
And so that is something that you have to be pragmatic about and thoughtful about in terms of what it is that you want to do inside that account. But
Yeah.
let's change topics here a little bit. Let's go to what we kind of brought up there in terms of the crazy social media advices out there. Oh my God, TikTok. Oh Lord. Oh, TikTok, TikTok. I don't.
Yeah,
You know what's funny? I don't even have a TikTok account.
yeah.
I don't have it on my phone. I don't go
I
to it
don't
on
need
my
them.
computer or anything like that. But I hear about all the stuff that's on TikTok because people are cross posting it to
Yeah,
Twitter, or I guess they call it X now,
yeah.
which is where I get a lot of my information. And we got the tax Twitter. I don't know if you're familiar with that or
Mhm.
pay attention to that at all, but that's on Twitter as well. So
Okay.
yeah, obviously I've seen some crazy stuff, so I'm sure you have too. Maybe
Yeah,
a few things you want to bring up that's like, oh my God, these are just insane that people are even saying this.
yeah.
And let's explain the actual reality of that strategy.
Yeah, yeah, man. I get it often, and I don't have a TikTok or a Twitter. I just I try to limit, unplug social media, to certain extents and stuff. But yeah, man, I like in my space, man. I get clients all the time sending me, "Hey, I saw this on TikTok," or "Hey, I saw this on Instagram," and stuff like that. And they're they're coming to me with strategies and everything that don't apply to them. Like just because they saw it and everything, or they're trying to do stuff and it doesn't, really apply. But then also too, being able to have that conversation when they've done something and they're thinking like, oh, this was this. Like prime example, clients sometimes they feel like, oh, I can just go buy a car in the business name and then now it's automatically 100% deductible. And I'm like, no, it's not. Like, do you use this vehicle for like business use or is it personal use? Like, are you keeping up with the information that you need to keep up with to justify this? Will it pass an audit? Like, will it pass a smell test? And so, like that's
What I
like,
that's one where as soon as I say, "Do you have a mileage log?" they start looking at you with these big old eyes, like, "What are you talking about?" I didn't
yeah,
know I needed to do that. Well,
yeah,
yeah, in order to be able to deduct vehicle expenses, you got to have a mileage log. And I don't
yeah,
care if you're doing the mileage deduction or you're doing the
right.
actuals. You got to have
You
the
still
mileage
need
log to support how
exactly,
much on the actual side you can write off. So, yeah,
exactly,
that's a
exactly.
huge misconception on that one. That you
Yeah,
brought up a
man.
really good one.
But you see on social media is people always like promoting it. But it's like the thing about it is that, and I was at a CPE one time and a guy presented on this. It's like you're taking this advice from people who don't even work in the profession. So it's like a CPA. I was at a CPE once and he was sitting with a client and they said that one of their friends told them about this tax strategy that they need to put on their tax return. And he said, okay, well, what does your friend do for a living? And it was like, all right, well, he's a plumber. And they said, oh, okay, cool. Well, look, next time, I need some plumbing advice and everything like that. I'm gonna call you. And it's like, well, why? And it's like, because you're gonna take tax advice from a plumber, like why, take plumbing advice from me, So I'm like, yeah, it's definitely that situation, man. And then just a bunch of other things, even like, oh man, the biggest one I get is like clients are just starting the business and they're like, oh, I want to be an S corp. And I'm like, why? And they're like, because it's going to help me save on taxes. And I'm like, how? And then they're like, I'm talking like business hasn't made any money. Like, and I'm like, they don't understand the reasonable salary stuff, don't understand basis information. And it's just a lot. They don't understand keeping up with, a balance sheet, because that has to be reported on a return, and don't understand that you're filing a completely separate return. And even on that front, even clients who, they just start a single member LLC and they thinking like, oh, I got to file separate taxes for my business. They don't know about a Schedule C, and so it's they. I've had people come to me and they filed their personal tax and they like, oh, I need to get my business taxes done, and I'm like, so you a partnership, a S corp or a C corp? And they like, no, and I'm like, well, how did you do your personal taxes? And so it's just a lot, man, and it's a lot of misconceptions that are out there. So my biggest thing is just I tell people, look, talk to a professional, man. Go like you wouldn't go to the grocery store and try to get medical advice from somebody. Like you like we're in this space for a reason. We went to school, what I'm saying, got degrees, got licenses and stuff like that. And every CPA, accountant, EA or whatever stuff may not know everything, but if you're just starting in the business, I'm pretty sure I probably know more than you. I just say I'm trying to spread the message that like it is important. I mean, even to go back to the IRAs and the stock market and stuff like that. The reason why people feel comfortable going on whatever brokerage site, even Robinhood, like and purchasing investment for that price is because CPAs are behind the scenes, actuaries, accountants are behind the scenes verifying the books that this company is reporting and which their stock price is being based off of. So it's like we have such a high level of trust, like I guess high level trust, but then when you get down to the degree, it's like why people don't trust us, But I don't know. It's but they trust TikTok.
Yeah. Well, And I don't know that it's so much that they don't trust us as it is that they don't like the answer that we give them sometimes,
Yeah, I
right?
would say that.
So
Yeah.
I think they after usually after I explain the actual rules to a client for something that they saw on, social media,
Yeah.
I feel like they get it. They don't
Mhm.
like the answer, but they get
Yeah.
it. And they understand that we're not going to do anything that's going to potentially end up with them getting into an audit situation,
Mhm.
especially if it's something major to where
Yeah.
you could even potentially end up in jail for filing a fraudulent return. Like that's
Right.
not. I'm not going to jail for nobody. I don't
Right.
care who
Right.
you are. There's no amount of money that's making me go to jail over a freaking business deduction. Like that's not
Right.
happening.
Exactly.
So, um,
Or
and
even losing my license.
that too, right? Neither one of those things look like good things to me. So it's just it's interesting, yeah. And there's been only a couple clients over the number of years that I've been in business have felt so strongly that their position was correct that they ended up leaving, and I actually was perfectly fine with that
Yeah.
because
Yeah.
I felt like if you're gonna be complaining over this, uh, and in those cases they were actually very small deductions, right? I'm
Mhm.
just like, if you're complaining over this little rinky-dink thing, like for example the 280A
Yeah.
exemption for the Augusta rule, right?
Mhm.
um, Another really misconceptualized
Yeah.
fallacy
Yeah.
out there that's all over the freaking social media and internet.
Yeah.
They wanted to write off like $20,000 of uh, Augusta Rule stuff, saying that they had a monthly meeting at their house. I'm like, no, you didn't. So it's just like stuff like that. It's just like, come on, use some common sense, people.
Yeah.
If you want to do something like that, okay, then do it the right way.
Yeah.
Go get some estimates from some hotels or similar places around the valley, or
Mhm.
not. I say the valley because that's where I live, but wherever you live, other Airbnbs, VRBOs, how much it would
Mhm.
cost you to rent those for a similar meeting space, and show me that you actually had people come to your house to meet with. I know that
Right.
they're not inviting. Most of these business owners are not inviting their employees to their house. It's just
Right.
not happening, right? And
Right.
so it's like it's just sometimes you have to just be like, okay, I know you're not doing this, all right,
Right.
uh, But anyways,
Right.
I guess into
Like
a
I said,
little bit of wax.
it's just like telling
Yeah.
people that you can do these things. These strategies are like you can implement them, but it requires work to
Yes.
do them. What I'm saying?
Got to put
You
in the
can't just
work.
wake up and say, "Oh, I'm filing my return. Oh, I want to use the Augusta rule." Like click this button,
Yes.
let's do it. Like no, it's and I tell people all the time, it's when you get to the preparation standpoint, it's really kind of too late. There's only a handful of deductions that you can really get at
Yes.
preparation time. It's the planning that's the most important. And so
Absolutely. You
it's
come to
like,
me before the end of the year, not after the
right,
end of the year.
right. And actually not even in December. Come to me like you gotta come to me throughout the year because now at
Yes.
this point we gotta keep up with this and make sure that you're doing what you're doing. And another thing with social media, it's kind of us as a profession, like people think we're nonprofits at certain levels. Like I'm like, no, no, you want to have a meeting with me? I'm not just meeting with you for free. Like you have to pay for this, like. And so yeah, so it's just I'm 33 years old. So like I said, I started my practice when I was 25. So I get a lot of younger clients, and everything. And so it's battling those. Like I said, I started from scratch. So in the beginning, I was just doing business with who wanted to do business with me. So I got a lot of that. But now being in the game a little longer, I'm starting to get the clients that actually really need me and actually value the knowledge that I have and the services that I provide.
Yeah, no, that makes sense. So that's good. Um, yeah, it's important the more mature you get in the space that you make sure you're taking on the clients that you actually want and that are
Yeah,
that you get along with, that don't cause issues or headaches.
Yeah,
Those are the most, awesome clients, and the ones that don't fit that mold, there's plenty of other clients out there. So,
yeah, right.
especially right now where there's a huge shortage in people to help out, small business owners and others, right?
Yeah,
So huge gap in what's needed and what's there.
yeah.
So we're running a little low on time here. So why don't we just do this? So if you had, let's say, maybe a piece of financial advice and a piece of tax advice that you could give a small business owner that's just starting out, what would you say? Because this is the Ignite Business Talks podcast. So let's bring it to the business side of things. What would you
Okay.
say to someone who's um, not starting out, but more mature in their business on some things that they should maybe or something that they should maybe consider from
Yeah,
a tax and then from a financial standpoint.
gotcha. So for somebody who's more mature in business, it honestly depends on what their needs are at the time. So, you know, if they're in an area where they know they're trying to grow, like they're trying to get their business to the next level and stuff, the biggest thing that hinders a lot of business owners is cash flow. So, they want to grow, they want to hire new employees, they want to do more marketing, they want to get new equipment and stuff like that, but they have trouble with cash flow. So I would say, uh, now you might not want to hear this, but contingent on, I don't know if this business owner might have, investors or people who would fund their business and stuff. But in the event if they don't, our next resource is the bank. So, getting loans, lines of credit, and things like that. So I tell my startup business owners, or even like ones who are immature, if you're in this area where you're trying to grow, hey, bite the bullet, pay taxes, show profitability. Don't try to take every deduction that like that's out there. Don't try to utilize writing off all different types of stuff, because for the bank, they want to see that your business is profitable, especially if you're self-employed and this business is your only source of income. They're going to look at your Schedule C, 1120S, whatever tax form that you're filing, and see what your net profit is, and how they're going to base how much of a loan that they can give you, how much of a line of credit that they can give you. And so, you and that those are the things that you're going to need to utilize in order to grow your business. Now, once you'd have to do this for 1, 2, maybe 3 years. Bite the bullet, pay the taxes on the net profit and stuff like that, and keep it rolling. You got to be forward thinking. But then once you have that loan or that line of credit, then now you can be a little bit more aggressive in deductions that you're trying to take, because essentially you try to get the line of credit or the loan to purchase equipment or hire staff, like to gain more business deductions anyway. But you want those deductions and everything to spur development, spur revenue for your business. So in turn, it's going to come back and pay you. And then now you got options to start putting money into retirement accounts, offering health benefits to your employees, doing more, diverse things like a self-directed IRA or something, or, taking a little bit more risk, because you have a stream of income, a constant stream of income that is going to come in. I see a lot of people, they try to start, multiple businesses at one time, and, and do different things. But I would say, the key is to get one stream of income first, like get something guaranteed that is coming in, and then allow your other business ventures, your other streams of income to flourish off of that one stream of income. But like I said, having cash or having capital is good, but having access to cash and capital is better. If you have access to credit, lines of credit, or access to where you can go get capital, you can always go get that. So if somebody's always willing to lend you money, then you kind of never really run out, which is why our banks don't fail, because the government comes in and bails them out when they do stupid stuff. But
Oh boy, don't get me started on that.
but yeah, but that I would say the it's twofold: tax, financial advice. Get access to capital as quickly as possible. I started
Yep.
early on in college. I was getting credit cards, like, and just increasing the limits on them. I wasn't maxing them out or anything, but I was just getting credit cards like just to get them. They increased my credit utilization. And then when I started the business, I actually had to lean on those credit cards to manage my personal expenses while I was investing everything that the business was making back into it. And then eventually the business actually started making money. I was able to pay those credit cards off, and and now here I am. So
Good, good, good. Hey, two birds with one stone. I like that. So, and some good advice. You're absolutely right. I mean, lending, you know, it's a contradiction of wants, right? If you want someone to lend you money, then you have to pay a little bit of taxes. And the one thing I would say to people in response to your recommendation there is, it's not a bad thing to pay a little bit of taxes. I
yeah,
mean, I have some people that are like, I don't want to pay any taxes. I'm like, that's not realistic. You're not
yeah,
going to be a good client for me. I think you should go somewhere else.
hmm
There's nothing wrong with paying a little bit of taxes, especially if your effective tax rate's like 10 or 15%.
right,
That's freaking amazing. I mean,
right,
there's nothing wrong with that at all. There's a lot of people that, are so worried about paying a lot of taxes. I'm just like, uh, if you look at it from a percentage standpoint, you're actually not paying that much.
yeah,
So just kind of keep that in mind that even though you're showing a little bit of profit, that means you're actually making money, right?
exactly,
Which is a good thing. Your business should be making money. If your business isn't making money, then you're getting the debt for the wrong reasons. Because if
exactly,
let me tell you, if you're not making money, you go get debt, then it's only going to compound the issue because now you're
exactly.
not going to be able to pay back that debt and you're
Yep,
still not making money. So you first
yep.
need to make sure your business is making money.
hmm
And if it is, and you just need a little bit of extra capital to spurn the growth, like you said,
hmm
then you're good, right? And so the
Exactly.
mature business owners that was for, I think, get that and understand that, and so that's a good tip. So awesome. Yeah. Anything else that you wanted to say at all, or before we end the recording?
Uh, yeah, I mean, my business owners and your finance people who listen out there, understand that it's a journey. It's a journey and it's cyclical. It's not always going to be like a straight line. Or a straight line up. It's going to take twists and turns, and it's also going to take time. And so, whether you're at the position where you're trying to purchase, you just graduated college and you're trying to purchase your first home, or you're at the stage where you're about to retire and you're thinking about estate planning and stuff like that. You look at those journeys like they are. It's just twists and turns. It's no clear cut one way to do anything. So just because one person might be doing something that works for them, do what works for you, and be comfortable and proud of what you do that works for you. Because I feel like we get so tied up in comparing ourselves to others in our financial journeys that we miss out on the things that we have accomplished, and then ultimately, people die and they feel like they haven't accomplished anything. So, appreciate the journey, trust the process, and just and work with a professional.
Yes, work with a professional, someone that is actually certified to do your taxes for you or to give you financial advice.
Yes.
All right, so uh, just real quick, because I have plenty of people who listen to these things that are not my clients. How would someone get a hold of you? I'm assuming you're always taking on the right client. Keep
Yeah.
emphasis on the
Yeah.
right client. I'm the
Yeah.
same way. So, how can people get a hold of you if they're looking for someone to help them out? Because I know I
Yeah.
can't
So
take on everybody that wants to get stuff done. So,
Yeah, so you can reach out to me. I'm at www.jrobinscpa.com. So JROBINSCPA.com. On Instagram at jrobinscpa, Facebook at jrobinscpa, email info@jrobincpa.com, and phone number 225-650-7306. And so located here in Baton Rouge, Louisiana, South Louisiana. So if you're looking to, come get some good food and football this fall, come in, come give us a
that's
call and everything.
awesome.
But yeah, but that's the way to get in touch with me.
Sweet, sweet, sweet. Well, all right. Well, this has been another episode of the Ignite Business Talks podcast. Again, I'm Ignatius L. Jackson, CPA, and thanks for tuning in. We had our guest, Joseph Robbins, CPA, here with us today to talk through some bad advice that we're seeing out there on social media, as well as some financial advice in terms of things you could do for your business. And so, hopefully, everybody enjoyed, and we'll be back with you with some more great content in the near future. Hope you have a great day or evening or whenever you're listening to this, and peace.
Cool deal.